So we're going to be kicking off by having a keynote address, and this is going to be also followed by an interview. So basically, it'll kind of be happening at the same time. The keynote will happen first, and then we'll have the interview. And to deliver the keynote address, which is titled Maintaining Sustainable Financing Support for Critical Social Infrastructure Investment, is George Guvamatanga, who is the Secretary for Finance and Economic Development at the Zimbabwean Ministry of Finance and Economic Development. He'll be in conversation with Nicholas Oliver. He's the head of business development at NMS International. But for now, let's welcome to the stage George Guvamatanga, so to deliver that keynote.
Yeah, it's a very great pleasure for me to have this opportunity to deliver this keynote address. And thanks to George, Michel, and the team at GTR for creating this wonderful platform for us to have a conversation. And obviously, when I see the names of sponsors here, I feel very much at home. I still try and describe myself as a banker, having spent over 28 years within the sector, with Barclays, with APSA, who are among the sponsors today. Yeah, most of the names I'm seeing here are very familiar names. So I feel very much at home today, standing on this podium and having the opportunity to have this conversation. So I will try to be very brief so that I can give Nick maybe more time for us to have a conversation. That's actually my preference, to have a conversation than to have a presentation. But I think what I might just want to highlight, I think giving Zimbabwe as an example to say, how do you create an opportunity for sustainable infrastructure funding? I think the first part, given actually the development in Zimbabwe and what has happened over the course of the past 3 years, where we have seen significant amounts of money going into infrastructure. And this is not money that has actually been coming from third parties, be it loans or anything. This has actually been own resources that has been channeled to major infrastructure spending. Some of it planned, some of it forced by the pandemic, where we've then ended up having to put significant funding into hospital infrastructure and just making sure that we create the necessary services to support the health sector given the pandemic. But how do you do it in an economy at one point in time, 3 years ago, that was running with inflation at over 868%? How do you do it with an economy that was recording huge budget deficits? Yeah? And how do we do it with an economy whose revenue, or 90% of its revenue, was being gobbled up in recurrent expenditure like salaries and wages? It clearly means that there is no such platform to do so. But over the past 3 years, we have seen major investments in roads. I was talking about the health sector. We've also seen major investment even in education, which is one of the key social services that we need to provide. We have also seen major investments in dams so that we climate-proof our agriculture. So the background, obviously, things don't balance. But I think the first part really to do so is that you need a stable economy for you to actually have a stable platform to deliver on sustainable infrastructure. So the first thing that we had to do was the fiscal consolidation. So in 2019, since January 2019, we have actually managed to consolidate our fiscals and reduce the element of budget deficit. In fact, we have created surpluses in less than 12 months. But this has actually been achieved by making sure that there's no recourse to central bank borrowing by government. We have also made sure that we maintain the public wage bill at 50% of total revenues, so that the other 50% can actually go to support the government infrastructure. There are many other basic issues that we've done, like rationalization of the civil service, be it how you hire and how you actually fill in vacant position, and actually just removing duplications that would ordinarily be there in a heavy government bureaucracy, in terms of just making sure that we actually have enough resources to support the key infrastructure growth. But just cutting expenditure alone does not assist. There's also the need to look at revenue enhancement and revenue enhancement measures. So we have introduced we were the first ones to introduce 3 years ago what is called an intermediate money transfer tax. And I think in the past 2 years, I've seen 2 more African countries actually, if I may be allowed to say, copying us and introducing a similar tax. But this tax is very important because Zimbabwe has got a dualized or a multi-currency system. We operate a local currency and also operate the US dollar. So we collect our revenue is in both hard currency as well as in the local currency. So, but what we've done, especially on this intermediate money transfer tax, the US dollar component, we've actually ring-fenced it for infrastructure support, targeting health. So we collect roughly $3 to $4 million US dollars every month in real currency, in real hard currency, which we have ring-fenced to support the health infrastructure. And so that has actually allowed us to continue to invest in infrastructure. Obviously, at the moment, we are doing this on a cash basis. But I actually believe that 3 to 4 million is enough cash flow for one of the banks that is listed on this list, really, to say, okay, this is sustainable income. You have shown that you can receive this income over a continued period of 3 years on a monthly basis. We think we can give you a 5-year loan. So if you actually take 3 million by 12, that is 36 million per annum, over 5 years, that's easily 180, 200 million. And if someone comes onto the table, Nick, I should have enough money to build all my 62 hospitals, actually, that we actually need to build over the course of the next 12 months. So what I'm trying to say is that you need actually a consistent and reliable cash flows. And the beauty about social spending is that you never run out of syntaxes, actually, to raise the necessary revenue. You know, if you just look around and you say, okay, I don't like energy drinks, 5% levy on energy drinks for health, right? You look around, you see cigarettes, you say, maybe I don't like cigarettes, 2% levy. So it's very easy to raise money. And people never complain, actually. When you, with the syntaxes, as long as you are channeling it to acceptable social services and acceptable social infrastructure. So over and above just managing the expenditure, managing the revenue, I think we have also been able to practically find other sources of revenue to support the required targeted infrastructure. So I think in summary, what I'm actually trying to say is that for one to be able, or for an economy to be able to create an opportunity for sustainable funding of social infrastructure, you first need to have a stable and sustainable economy. So we have actually managed to reduce the inflation from the highs of the 800 to the 900 to the current 60s. I think we are targeting 30 by the end of this year, and by end of 2023, we are targeting single digits. I think given our track record and the journey that we have traveled over the past 3 years, I think we have actually consistently demonstrated a track record of managing the budget deficits over the past 3 years. We have also demonstrated a track record of reducing inflation over the past 3 years. We have also demonstrated a track record of significant investment in infrastructure, including the social infrastructure, as I've already indicated, also a very consistent record. So we actually believe that there is an opportunity with the right macroeconomic framework to actually invest in sustainable social infrastructure. But as I said, that look, my preference is for a conversation rather than a presentation. I think I've just created a platform really for us to have a conversation. That was actually my intention. So allow me to then end my presentation on this note. I know I had been allocated 15 minutes so that I can have a conversation with Nick. Thank you.
We're going to show a quick video looking at how your work has freed up finance to start the process of revitalizing infrastructure, looking at health, as you say, as a major priority. For everybody here, we have been working with the Ministry of Finance, with the Ministry of Health for the last 2 years, putting together this health program. And the flows of funds have been regular and on time. We've got about 46 million into the program at the moment, and that is producing these hospitals around the country. Of course, as we move forward and as the fiscal situation stabilizes, as George has said, we will be coming to the market on behalf of Zimbabwe to further that funding, to speed up the process. And I think that there are a number of questions that have come out in our discussions, which we'll talk about in a minute. We'll just go into some of the burning questions that I've been asked. And one of those is on currency. Yes. Okay, and over the last few years, we've seen much in the press and much in Zimbabwe on the changes of currency policy and the changes of the currency use. And I think one of the big questions going forward that is being asked is the stabilization of that currency question.
Look, I think as I indicated during my short presentation, that we do run a multi-currency system, but it's predominantly a dollarized system, where at the moment, within the banking sector, about 40% of our deposits are actually in US dollars, which is roughly around 1.7. It fluctuates anywhere between 1.5 to 2 billion, sitting in accounts for banks in Zimbabwe. That's 2 billion US dollars, sitting in accounts as we speak today. And then the rest are local deposits. We also, as government, now collect about 30% of our revenues in US dollars and 70% in local currency. So it's a multi-currency system supported by deposits in the banking sector, supported by the amount of trade happening in US dollars. So, but you see, it was a very easy decision to make because of the nature of the economy, where there is access to US dollars from mining activities, from trade activities. And just for example, last year, for an economy of 14 million people, total US dollar inflows into the country from our system were 9.7 billion, call it 10 billion. And I've done comparisons with some of our peers in Africa who could not even receive 20% of what we received. So there is actually enough currency. That's what I'm trying to outline here. That there is actually enough currency circulating in the country. What we just need now to refine is how do we distribute it and how do we allocate it. At the moment, we've got a Dutch auction system that we are using, which I will be the first one now to say, given the growth in the economy, because it was a transitional mechanism that we introduced, that we now need to move to the next phase, given what now that the inflows are coming through, we are seeing a commodity boom, if you may say it, that has actually increased the amount of foreign currency we are receiving, and we now might want to move to the next stage of our foreign currency management system.
And I think that's exactly where a lot of the questions are coming from, the Dutch auction system. So investors coming into Zimbabwe are worried about the ease of repatriating their profits back to their home countries on a Dutch auction system. Where do you think this is going now? What are you going to say to our investors to say that
So it just depends with the nature of the project. I'll give you an example. So like all power projects, right, they are receiving largely their income already in US dollars. So actually, you can never get it better than that because you completely eliminate exchange risk. So you don't actually get local currency, which you hold, and you then have to wait to convert it into hard currency and expose yourself to the translation risk and exchange risk. It's actually hard currency, which you can receive today and repatriate immediately. There are other projects, obviously, where you get local currency or you get a combination. But what we've tried to do now is for the component that you require in hard currency, most projects we are now, as government, because we've got the hard currency income, we are now paying largely 70% local currency, 30% in hard currency. But there are other projects. We have had one of our mainstream projects, supported by most players listed here, which was for our border with South Africa in the Bide Bridge. And they largely collect most of the income in hard currency. So there's no translation risk, there's no exchange risk, there's no liquidity risk. You get the money, 30 days later, we transfer it to South Africa and we pay all the lenders that have participated in funding that particular project. So it's actually happening now. So the risk is very minimal. In fact, it's less riskier in Zimbabwe than elsewhere where you get the local currency and you have to look for the foreign currency. So it just depends with the nature of the project. I can give an example of another project, which is the health project we have with a company called NMS. Yeah? And that particular project, we don't pay them local currency. Yeah? We don't pay them local currency. We pay them in hard currency. Invoice comes, it's hard currency. It comes today, 7 days later, we pay, and the money goes to the UK. And there's never been an invoice that has been sent to us that we have not paid. And it has not been paid in the local currency. It's a direct hard currency. So I think the issue, practically on the ground, there is absolutely no risk. There's no headache of trying to convert Zim dollars into pounds. No, it comes, invoice in hard currency, it's paid in hard currency.
So I'd just like to take that one further.
Yeah.
If you've got a project out there, and there are a number of investors in the room here who are considering looking at one of your private projects down in Victoria Falls, the income from that project will all be in local currency. Yeah? And with the Dutch auction system to try to convert those profits to take them back out, how do you see that working? Then all the income is in is in local currency.
Yeah. So the reason why I mentioned that we received 9.7 billion of US dollar income 6 billion was from exports. Obviously, the commodity prices have done us a very, very good favor, and they continue to go up. So I'm actually expecting that we could easily receive 12 billion. The import bill, a reasonable import bill for the Zimbabwe is probably around 6 billion per annum. So, so if you do the numbers, there's still even a surplus. And that's why I said the issue is around now refining the foreign currency allocation mechanism and say should it be still remain in a dark auction in its current form? I don't think the answer is yes to that. So we need to refine, we need to review, but we have enough foreign currency to meet investor requirements and allowing us to remain with a surplus. So if you go and look at the IMF website, they will tell you that Zimbabwe has got 1 month import cover, but it's on the basis of what I would think is an archaic methodology of calculation. So if you ask me today, corporates in Zimbabwe are sitting on $2 billion US in their accounts. Corporate, yeah? And we've got our own reserves sitting with IMF. We've got our own reserves sitting on accounts. So roughly we have got about 3 billion, right? That is easily accessible today and say, so if there was a crisis which we said, can we have all the foreign currency that you have formally? I'm not even talking about what's circulating in the informal market. Tomorrow, Zimbabwe will put 3 billion on the table.
So, George, that neatly brings me to the elephant in the room at the moment, given the world situation, particularly in Ukraine and in Russia, and the impending increase in costs of foodstuffs and food security problems and fuel. Okay, and as we see in a number of countries, their fiscal situations grow over this period of time, it's going to be hit very hard by these increasing prices. How are you going to deal with that as a ministry?
Look, I think we have been very much ahead of the curve. I think great visionary leadership that now is there in Zimbabwe, because we have actually been focusing on local food production. So last year, we had a bumper harvest. We actually had 1.2 million tons of grain, right, coming into our silos from local production, 1.2 million tons. I think our demand for both humans and livestock is easily around 800 million tons per annum. We have also managed to increase our local wheat production to almost from about meeting 10% of our requirements over the last 5 years from local production and 90% from imports. We are now able to meet 80% of our wheat requirements from local production. And I was having a meeting yesterday. That's why I couldn't actually come in much earlier, because we were trying to find ways of now pushing it to 100%, given the developments in Russia and Ukraine. And so we have created the capacity to grow our own maize, to grow our own wheat. Soya beans, we still have a gap, so that might actually hit us a little bit. Fuel, we still import, so that might hit us a little bit. But again, see, the beauty about Zimbabwe is that it's a very well diversified and mixed economy. But we sit with the richest reserves of some of the most wanted commodities, be it lithium, right, now, the platinum group metals. We have got the 3rd largest platinum reserves in the world. Our gold is literally untapped. So the reality that is there is that whatever hit, right, we are getting now from oil, there is a compensatory side to it, because the beauty about it is that all the commodities have gone up. So we have got more commodities that we export that have gone up than the number of commodities that we import that have gone up. In fact, that gap for us, it has not been assessed, but if I do a very quick back of the envelope assessment, it could easily be a positive difference, actually, a positive gap when we look at all the platinum, the chrome, the steel that we can export. And all we have to import, as I said, is largely the oil, the fuel, and to an extent, as I said, we still have a gap on soybeans, but everywhere else, we are very comfortable. So the impact even of imported inflation flowing into our economy is very, very minimal.
George, thank you very much. I'm going to get the evil eye fairly shortly because we are going to run out of time. But just before we hand over to another panel, may I just throw that open to the floor? I think there's some microphones around. If there's anybody who's got any questions or any points they'd like to make to the Permanent Secretary.
Good morning, Permanent Secretary. Fred Sue from NMS. There was a period of time, not such a long time ago, where investor confidence took a serious knock in Zimbabwe. How would you characterize the government's position now on foreign investment?
I think we do have a mantra as government today which says Zimbabwe is open for business. And we are indeed open for business. But the picture in Zimbabwe is largely misrepresented most of the times, and largely misrepresented sometimes because of some of the sanctions that are still part of the broader socio-global political economy. But you actually need to come into Zimbabwe just to see what is actually happening there. But we have actually been looking at our ease of doing business just to make sure that we make it easier for those investors who want to come into Zimbabwe. We have created a one-stop investment center called ZIDA, Zimbabwe Development Agents, where you can walk in and get, as an investor, right? And all the opportunities are available there, and all the paperwork that you need is done in a one-stop shop, and you walk out with everything that you require and ready to do business. And I've already explained that, look, contrary to what one would ordinarily believe, it's very easy to repatriate your profits out of Zimbabwe. We do have some very minimal exchange controls that are within the economy. So I think it's just trying to deal with the perception of the past. But the real Zimbabwe today is very much open for business, and we are seeing lots of investors coming into power and energy. Tourism has been a little bit hit by the pandemic, but again, we've seen major investment in tourism. Even during the pandemic, there are still opportunities in transport and logistics. There are still opportunities even for private investment into healthcare as well. They over and above to complement and supplement what government is doing. Mining, I've already indicated that, look, there are major opportunities in mining. We are seeing companies out of the listed on the London Alternative Stock Exchange, companies listed on the Canadian Stock Exchange, Australian Stock Exchange, coming into the economy and doing major investments. I think one of the latest deals that happened was that a local company that was bought by a local lithium company, which was bought out by a Chinese company for about 400 million. But it's all investments that has happened in the economy over the course of the past 2 years. So the economy is very much open and welcome for investors who would want actually to come and tap on the opportunities. But you need to come to the country to actually get the flavor and to actually see real investment that is currently happening on the ground. And I hope we've managed to find the video Because at least it will...
We have found the video if you do want to show it to the audience.
Do we have time?
Yeah.
Okay. Well, I'll just finish off before we play the video then by saying that we work in a number of countries, as you know, across the continent. It's never easy for external companies working on the continent. We all know the difficulties out there. I have to say that Zimbabwe is one of the easier countries for us to work in, and that's primarily because of the openness that we find from your ministry and the work with Andrew Bumve, who's here somewhere. The openness and the speed of reaction makes our lives much easier. But just to set the scene as to what your economy is being able to do right now, can we show that short video to show everybody that this money that has been collected is being used for social good and sustainable? Thank you. So, Permanent Secretary, that's the first of the 30 of those units and 6 district hospitals that we'll be building with your improved fiscal situation. So thank you very much. Ladies and gentlemen, I'm afraid we've run out of time. Just to say, Permanent Secretary, thank you very much for taking the time to come here and speak to us. Thank you for GTR for the opportunity to hear what you've got to say. And for anybody who wishes to ask any further questions from the Permanent Secretary, we'll be here for the rest of the day. Ladies and gentlemen, thank you very much.
Thank you.